If I told you the world's richest people don't play the same money game as the rest of us, you might think I'm talking about tax loopholes, offshore accounts, or insider connections. But the truth is far bigger and far older than that. The elites build wealth using a system that quietly shapes nations, redirects crises, and transfers money upward long before ordinary people even realize what happened. A system built on influence, timing, and patterns. Patterns so predictable that once you see them, you can never unsee them again. You'll notice it in every financial boom, every market crash, every inflation cycle, every political shift, every unexpected economic event that suddenly makes billionaires richer. And today, you're going to see the blueprint behind that system. This isn't about conspiracy. This isn't about luck. And it definitely isn't about working harder. This is about understanding the rules of a financial world that was never designed for the majority, but always rewards the few who learn how it works. Welcome to AssetNova Studio, where money, power, and history leave their fingerprints. Let's begin. The foundational truth: the elites don't build wealth, they position themselves for it. Most people chase money. The elites position themselves so money chases them. That's the first rule of their blueprint. They don't rely on skill. They rely on systems. And every elite financial empire, from ancient banking families in Renaissance Italy to today's Silicon Valley titans and global investors, begins with one shared principle. If you understand where money is created and where it flows next, you'll build wealth every time. If you don't, you'll spend your whole life working for those who do. This is the part schools never teach. Your job tells you to earn. The system tells elites how to multiply. And the blueprint begins with step one. Step one, they master the money engine before anyone else. While the average person sees money as something they work for, the elites study money as something that moves. They analyze interest rate cycles, inflation waves, debt expansions, government spending, central bank policies, liquidity movements, market bubbles, currency trends. To most people, these sound boring. To the elites, these are signals, the weather forecast of global wealth. Here's something shocking. Almost every major wealth explosion in history was predictable months, even years, before it happened. When central banks print money, assets rise. When governments raise interest rates, weak businesses fall. When markets crash, liquidity is injected back into the system. When inflation rises, cash loses value but assets multiply. Elites don't react to these events. They prepare for them. A person watching the news is already too late. By the time a crash or boom is announced on TV, the elites have already repositioned their portfolio. That's the power of understanding the money engine. Because once you know how it works, you already know where to stand when the wealth wave hits. And the next part of their blueprint builds on this. Step two, they buy assets, not time. Here is one of the most painful truths about modern society. The system is built for asset owners, not workers. Every elite family in history, every dynasty, every billionaire, every empire shares one trait. They don't trade hours for dollars. They accumulate assets that produce money forever. These include real estate, companies, stocks, bonds, gold, intellectual property, energy, technology, infrastructure, patents, royalties, private equity. This is how wealth protects itself. A worker gets paid once. An asset gets paid forever. But the real secret isn't that they buy assets. It's when they buy assets. Because elites never buy during optimism. They buy during panic. And that leads us to step three. Step three, they enter before the crowd, exit before the news. Elites have mastered the rarest money skill: anticipation. They enter an industry when it is uncertain, misunderstood, or ignored. They exit when it becomes popular, mainstream, and overvalued. Let's check history. The railroads boom, 1800s. Elites invested before tracks were built, not after. The oil explosion, 1900s. They bought into oil before cars were mainstream. The dot-com era, 1990s. They funded early tech startups before the internet became global. Cryptocurrency waves, 2010s. They acquired early positions before retail investors poured in. AI and automation, 2020s. They invested long before the hype appeared. The rule is simple. When the public is afraid, elites accumulate. When the public is excited, elites distribute. This is how wealth is transferred quietly. But how do they always know what's coming? Because of Step 4. Step 4. They build powerful information networks. People often imagine the ultra-rich making secret decisions behind closed doors. But the real advantage is not secrecy. It's proximity. Elites surround themselves with economists, bankers, politicians, consultants, business founders, technologists, advisors, insiders, think tanks, institutional investors. While ordinary people hear news late, elites hear whispers early. For example, a politician hints at new regulations. Elites shift investments. A central bank signals new monetary policy. Elites adjust portfolios. A corporation quietly acquires a startup. Elites predict the industry trend. A nation starts printing more money. Elites move into hard assets. Information flows upward. By the time the public knows something, the elites already acted on it. This is not corruption. This is access. But information alone isn't enough unless you combine it with Step 5. Step 5, they use leverage strategically, not dangerously. Most people fear debt because they're taught to use it wrong. Elites use debt as a wealth multiplier. The difference: the poor use debt to buy liabilities. The elites use debt to buy assets. Liabilities drain you. Assets pay you. Elites borrow money to buy real estate, acquire businesses, invest in markets, fund expansions, purchase revenue streams. Because when the asset grows, the debt stays the same, and inflation actually makes the debt cheaper over time. This is the opposite of how most people live. But the real power move: elites time their leverage. When interest rates are low, they borrow aggressively. When rates rise, they pause and buy discounted assets from over-leveraged people. This is how empires grow quietly. Step 6. They benefit from crises instead of suffering from them. Every crisis creates two groups: people who lose everything, people who gain everything. Guess which group the elites belong to? Because crises aren't just moments of chaos, they are moments of redistribution. And history proves it. During wars, new industries emerge. During recessions, assets fall and become cheap. During pandemics, technology accelerates. During inflation, asset prices rise. During political shifts, new regulations reshape markets. Elites prepare for crises by holding cash, holding assets, staying liquid, reducing bad debt, building connections, staying informed. So when a crisis hits, average people panic. Elites buy. This has repeated for hundreds of years, and it will repeat again. The deeper you go into the world of elite wealth, the more you realize something uncomfortable. The rich don't just play the game. They design the game, and they design it so you never win. But here's the good news. Once you see the blueprint, you can start using their system for yourself. Part 2 is where everything gets revealed. So, let's continue. The elite blueprint: layers you were never supposed to see. Most people think wealth is built by hard work or luck. But elites work on a different timeline, a different mindset, a different financial architecture. They follow a structure, almost like a pyramid that goes deeper underground the more you study it. Let's peel back those layers. Layer 1. Ownership over labor. In the world of elites, labor means nothing. Ownership means everything. A person who works earns once. A person who owns assets earns forever. The elites buy a businesses, a real estate, a intellectual property, a infrastructure, a distribution channels, a supply chains, a rights, royalties, and patents. They rarely spend their own money. They use a leverage, debt, an investor capital, a tax incentives, a government-backed loans, a structured deals, because they understand a rule. If you own nothing but control everything, you're untouchable. That's why many elites don't own assets in their own name. They own companies that own assets. You'll see their official name almost nowhere. but their fingerprints are everywhere. Layer 2. Money flow versus money storage. Middle-class people save money. The wealthy redirect money. Savings is static. Cash flow is alive. The elites don't store money in banks, they push money through private funds, a trust, a holding companies, offshore accounts, asset-backed loans, a tax-optimized vehicles. This isn't illegal, it's strategic. It's what happens when you understand that. Money is not meant to sit. Money is meant to circulate. And every time it moves, someone takes a fee. And that someone is usually the elite. Layer 3. Turning debt into currency. This is the level where most people's minds break. For the average person, debt is a trap. For the elites, debt is a weapon. They borrow against a real estate, a stocks, a businesses, a intellectual property, even future cash flows. Why? Because borrowed money is tax-free, inflation protected, leverageable, scalable, deniable. When you borrow against an asset, you keep ownership, you get liquidity, you minimize taxes, you avoid selling. This is how billionaires live cash-rich while technically showing low income. It's not magic. It's structured debt. The middle class never sees this level because they were trained to fear debt, while elites were trained to use it. Layer 4. Insurance loops, the hidden wealth machine. This is one of the biggest secrets in the wealth world, and it barely gets talked about. Elite families use high-value insurance contracts to grow wealth tax-free, borrow against their own policy, pass wealth through generations, protect assets from lawsuits, avoid estate taxes, create liquidity instantly. It's like a private bank built inside an insurance policy. While the average person buys a $20 per month plan, the elite buy multimillion-dollar structured insurance systems. This is how wealth leaps across generations. Layer 5. The private markets, where real wealth is made. Public stock markets? That's for the spectators. Elites earn their real money through a private equity, a venture capital, angel investing, distressed asset buying, early-stage acquisitions, a private credit, off-market real estate, government contracts. They don't wait for opportunities. They manufacture opportunities. They buy companies before they grow. They buy land before the city expands. They buy infrastructure before the public knows it's valuable. By the time the average person hears a financial tip, the elites have already extracted their profit. Now let's go even deeper, the psychological level of the elite blueprint. Because this is where the real transformation happens. The elite mindset, a different species of thinking. The difference between the wealthy and everyone else isn't just money. It's belief systems. Here are the mental frameworks elites use that average people never develop. 1. Information is the new oil. Elites pay massive amounts of money for private research, advanced economic reports, insider analysis, forecasting tools, political intelligence, a legal loophole consultation. Because once you know what's coming, you can position yourself before everyone else. A single piece of information acquired early can build a fortune. 2. Attention is currency. This is why brands, influencers, and media companies are being bought by wealthy families. Whoever controls attention controls narrative. Whoever controls narrative controls decisions. Whoever controls decisions controls money. 3. Leverage is everything. Leverage means a money working for you, people working for you, a time working for you, a systems working for you, technology working for you. While most people only leverage their own effort, the elite leverage everything except effort. 4. Protect before you grow. Average people grow money, then try to protect it. Elites protect money first, then grow it. This is why they use illegal structures, a trust, a shell companies, offshore holdings, diversified portfolios. It's not because they're hiding anything. It's because wealth without protection is a target. 5. Money is a long game. While most people chase fast income, Elites chase systems that pay forever. They operate on a 10-year plans, 30-year plans, sometimes 100-year strategies for family legacy. They know something the average person doesn't. You don't build wealth fast. You build wealth continuously. The true secret, the wealth companion system. This is the single biggest pattern that appears in every wealthy family. They build systems that work even when they don't. What kind of systems? Automated investments. Businesses that run without them. A long-term compounding assets. A multi-layer tax structures. A generational trusts. A intellectual property. A media channels. A debt loops that generate cash flow. If you ever wondered why wealthy families stay wealthy, it's because they're not relying on human energy. They rely on financial architecture. The twist, the system was never hidden. You were never taught to look. The most shocking truth in all of financial history is this. The elite system is not a secret. It's just invisible to the people who aren't trained to see it. The school system never teaches asset creation, a tax strategy, a cash flow engineering, equity ownership, a debt arbitrage, a private markets. Why? Because the system needs workers, not competitors. If everyone learned the elite blueprint, the entire economy would change. So the information stays in private universities, elite circles, boardrooms, wealth advisors, family offices, political networks, not on the school syllabus. The lesson you can use today, actual blueprint for beginners. Here's how a beginner can start walking the elite path in simple steps. Step 1. Build one income stream that isn't tied to your job. Examples: a small digital product, a service, a skill-based business, a content that builds attention, a consulting, e-commerce, an online offer. This is your seed capital. Step 2. Turn income into an asset loop. Use the income to acquire a dividend-paying stocks, a rental property, a small online asset, a royalties, a cash flow business. The goal is simple. Your money should start buying assets. Step 3. Use time as your multiplier. Hold your assets. Don't panic sell. Don't chase trends. Let compounding do what compounding does. Step 4. Build your wealth shield. Start with basic protection. An LLC, a simple trust, or insurance strategies, a basic tax optimization, a clean financial record keeping. Your shield protects your empire. Step 5. Expand into elite level tools. Once you reach stability, upscale into a private credit, angel investing, a small private equity deals, a structured debt, a tax-advantaged insurance, a multi-entity structures. This is where wealth accelerates fast. Society teaches you to admire the wealthy, but never to understand how they operate. Today, you saw the architecture behind the curtain. This system wasn't built for you, but now that you see it, you can start building your own. Welcome to the world behind the world. If you want more cinematic breakdowns, more deep dives into financial history, secrets of money, and the blueprint of wealth, subscribe to AssetNova Studio, where we don't just teach you money, we reveal the system behind it.